In today's video, we'll talk about investing in water, one of the investments of Dr. Michael Burry. He's an investor who was in the movie The Big Short. The movie was made in his honor. After predicting the previous financial crisis, Dr. Burry invested heavily in water and strongly believed in his investment thesis. In this video, we'll look at the different options through which we can invest in water, and we'll look at some interesting statistics and facts. Hello friends, and welcome to The Successful Investor, the place where we learn and invest. After air, water is the most valuable of all objects and assets on the planet to human life. But unlike air, water is not so abundant, and someday, easily available drinking water will begin to run out, and this will raise its price. This phenomenon is getting closer and closer, and this can be seen and judged by looking at some basic statistics. Let's start with information from the United Nations. Today, about 1 billion people worldwide in more than 43 countries suffer from a lack of drinking water, and this figure is expected to rise to an alarming 1.8 billion people by 2025. According to the WWF, currently 1.1 billion people worldwide are experiencing regular shortages of drinking water, and as many as 2.7 billion people worldwide are experiencing a shortage of drinking water at least once a month. According to the current rate of depletion, WWF resources estimate that by 2025, nearly 2/3 of the world's population will face regular shortages of drinking water. Although the Earth's surface is covered with nearly 70% water, only 3% of this water is drinkable, and 2/3 of this 3% are trapped in glaciers. That means that in reality, everyone on Earth are only able to share around 1% of all water. This makes this resource highly susceptible to price increases in the long run, as the first law in economics is supply and demand. When there is such demand, and supply is severely limited, sooner or later, prices begin to catch up with demand. What has attracted the interest of Dr. Burry is the amount of water used in the manufacturing of food products. In an interview with Dr. Burry for the New York magazine, it said that it takes more than 400 bottles of water to make 1 bottle of wine. This is absolutely astonishing, and it shows the extent to which water is depleted worldwide. For those of you who don't know, a huge amount of water is also used for making all kinds of foods. This graph shows the amount of water needed to produce 1 kilo of the following foods. More than 17,000 liters of water are needed for 1 kilogram of chocolate. 15,400 liters of water are needed for 1 kilo of beef. In general, chocolate and meat are the foods that need water the most. Fruits and vegetables have the least need for water, but again, hundreds of liters of water are still needed to produce 1 kilo of apples, tomatoes, potatoes, etc. What Dr. Burry is doing is buying farmland nearby large water resources, either rivers or underground water sources. Unfortunately, ordinary people find it much harder to afford such an investment. But what we can do is invest in ETFs that allow us to take advantage of a diversified allocation to this sector. ETFs, or exchange-traded funds, are funds that invest in many companies and can directly or indirectly invest in the water sector. By buying shares in such ETFs, we gain greater protection of our capital and reduce the risk of a single company going bankrupt, taking our financial resources with it. We'll now look at the various ETF options through which we can invest in water and the water sector. It's important to mention though that this video is for educational purposes, but you should always do your own research before investing. The top 3 largest liquid water investment funds are as follows. There's the LNG Clean Water UCITS ETF, Elixir World Water UCITS ETF, and Global Water UCITS ETF. UCITS means that the fund meets the European requirements for investing in an ETF. So if the fund itself is a UCITS ETF, this makes it suitable for investment by European citizens. Before we invest in these funds though, let's compare their performance with the overall S&P 500 index. In the last 1 year, the S&P 500 index has risen 32.5%, while the LNG Clean Water ETF has risen 45%. Elixir World Water ETF has risen 41.5%, and the Global Water ETF has risen 42%. This means that the trend for the last 1 year shows that these funds perform better than the S&P 500 index. However, a very important thing to remember is that past performance does not indicate future performance. It's an unwritten law in investing, and translates as follows. Past performance does not in any way guarantee future performance. Many people look to the past thinking that what used to happen will inevitably happen in the future. In the world of finance and investment though, it doesn't work that way. But in this case, we can inspect this data and it gives us an idea of the performance of the entire sector relative to the main S&P 500 index. Let's take a look at some funds to see the important things we might look out for. For example, the Global Water UCITS ETF. This is the home page of the fund. Here we can see what the goals of this fund are, as well as its ticker symbol, which is IH2O. This fund offers a diversified portfolio of 50 companies affiliated with the water industry. The fund's goals are to monitor the overall performance of 50 of the largest companies in the industry. Here we can see the key facts section of the fund. We can see that the assets under the fund's management are $2.5 billion, as well as the fact that the fund was established in 2007. The total expense ratio is the annual fee of the fund, and it's 0.65%. For those of you who are not aware, this is a fairly high annual fee, but in general, it's normal for this industry. The fund is distributed, which means that dividends and profits from your investment are paid twice a year. The other option is for the fund to be accumulating, which means that dividends and profits are reinvested back into the fund and not paid out as a dividend. The next very important part is portfolio characteristics. Here, we'll see how much the average dividend was for the past 12 months, and in this case, it's 0.82%. Here, we'll see the average P/E, or price to earnings, of all companies in this fund, which is quite high, but is equal to the average P/E of the S&P 500 index. Other important things are the number of investments, in this case, from 49 different companies. Standard deviation means the average volatility for the period, in this case, for the last 3 years. The average annual volatility is 16.33%, which is considered a high volatility. This is a very important thing to consider with any ETF fund, no matter what industry the fund's holdings are in or the percentage distribution. In this case, we can see that over 50% of all investments are allocated to the top 10 positions of the fund. This means that the performance of the fund will strongly correlate with the performance of these 10 investments, and it's advisable that you should check each of these investments separately. You should always research carefully before investing in ETFs. Another important action is to check the geographical location of the investments. In this case, the largest share of investments are in US companies, 53%. Then with nearly 15% shares are companies positioned in the UK, then 9% in France, 8% in Switzerland, and other companies with the remaining percentage. It's important to have companies positioned in established countries, as we don't want to see the risk of nationalization of water resources. And the last thing we want to look at when investing in any ETF is the sectoral diversification of the fund. In the case of the water sector, it's normal for all investments to be mainly in the industrial and services sectors. These areas are the most important things to consider when investing, not only in water ETFs, but in all types of ETFs. Thank you for watching. If you enjoyed the video, please like and subscribe. See you next video.